you are joining us, thank you so much for taking a minute with Kevin Onizuk to talk about mortgages and real estate. And we are here to help you prevent making mistakes that could be costly and hopefully finding ways to save you money when you are buying or perhaps even selling real estate. So Kevin, thank you for joining me this morning. It's Wednesday, August 31st.
Yeah, happy to be here.
Right on. It is. So, school's back in session now. Things are kind of in a place where all over the place, in a sense, there's some more normalness that's happening, like in people's lives. Still some kind of crazy headlines out there. One of the things that you and I are trying to do, of course, is make sure that we provide education for people so that they make really intelligent choices and understand the facts, understand the what's available to them, what's real in the housing market and with mortgages, and putting them in the right position to know that they've got people here to help them and so forth. We did this, and just so I want to say thank you so much for taking the time last Thursday to do that education course with me, that buyer education. There's a lot of value in that. It is something that we can make available for people. So certainly we'll do another one of those at some point in time, maybe quarterly, however we decide to do it, which was great. But hey, if anybody's out there looking for more information, looking to learn and what they can do, we're gonna share a little bit of nuggets today. I have this great book though that I wanted to just mention. I'm reading this really fabulous book called, if you can see that, it's called The Gap and the Gain by Dan Sullivan. And it's I love catching into a new book, and it's this book was highly recommended to me. It's really a great way to begin to look at things in a different way, where a lot of times we're in this environment where we look at what we don't have and we fixate and focus on what we don't have. And yet when we can find that place where that's the gap. So if we're living in the gap, we're living in where we don't have. When we live in the gain, we can see the progress that we make. And so we're here to help people make progress in their lives. And I'd love it if we could chat a little bit about some kind of case study. Maybe we could talk a little bit about just sort of case study for the sort of a typical type of situation that we might face. In fact, even a case study of a situation that we're hoping to work through with another prospect that they want to buy a home. So somebody's approached and they want to buy a home, and you and I've kind of shared some numbers on what might this situation kind of look like. So we got an individual that's earning a fairly typical $55,000 a year and has a pretty stable documentable income. In this case, W-2. So, if you're self-employed, there's a different set of documents that we get into, but this is a pretty documentable income. What can we do for this person? And what kind of situation what kind of things might we encounter as we're doing this?
Sure. When we're getting started with anybody looking to purchase on the financing side, we start with some basic application information: who you are, where you live, where you work, stuff you would generally know off the top of your head. And the two main things that we're looking at is credit and affordability. So we do review credit score, overall credit rating. Always tell folks, doesn't have to be perfect. We just want to see it's pretty good. And Jen, you've borrowed some money, paid it back reasonably well. Especially important is what's happened in the last year or two, because that's the best indicator of who you are now. But the second piece is, I think, where you wanted to chat about more today, and that's the affordability side. So we do look at that, making sure that a mortgage payment will be affordable. Right. And that really is one of the best indicators of successful home ownership, being able to continue to make good on-time payments. And we look at bills versus income is the biggest one. Assets are important also. It's great to have a financial cushion. In some cases, you need money for down payment. There are low and no down payment options available. But if you do have funds saved for down payment, that can open up additional options. And if other things are on the bubble, marginal, having money saved shows that you are financially stable, are able to save money on your own. And that basically shows that you are a better qualified buyer. And with that financial cushion, it's nice to know that if something did happen, you've got some reserves, we call it, to fall back on to make sure that the bills stay paid on time. So we always tell folks saving is very important. But on the bills versus income, we're going to look primarily at what shows up on credit, like credit cards, car loans, that type of thing. We're not looking for utilities or cell phone bill or anything of that nature. We don't need to know how much you spend at the grocery store. It's your basic obligations.
Right.
So also any alimony, child support obligations, that one we take into account as well.
Right.
So yeah, go ahead, John.
I was going to say, when you pull a credit report on somebody, first off, what do you need to do in order to pull a credit report?
We just grab your basic application information, your name, address, social security number, and date of birth. That's primarily what we need. And of course, the most important thing is your permission.
A permission, right?
To pull your credit without you saying, yes, it is okay to pull my credit.
Does it cost anything?
It costs us as the lender when we pull credit, but typically that cost is not passed along to the buyer up front. That's just, part of our cost of doing business.
Right. It's kind of, so for you guys, it's a gratis. It's kind of a service that you provide. I know the credit companies. Remind me the names: Experian,
Equifax, TransUnion.
TransUnion. Okay, Experian, Equifax, and TransUnion. So those three credit companies, they each kind of have a fee for providing that service, and it kind of builds through this central thing. So you pull all three, you got the three credit scores, you're looking at the three credit scores when you're looking at those credit card payments. So if somebody has a $20,000 credit card debt, are you looking at the $20,000 credit card debt?
We're looking at the minimum monthly payment.
Minimum monthly payment.
Go through credit, and the minimum monthly payment that reports to credit, that's what we use for qualifying.
Right.
A unique one that people often question is student loans. And folks often think my student loans are not in repayment, so that doesn't count. In most cases, it does, because we have to assume at some point your student loans will be required to be repaid. Right. So the mortgage guidelines, not the lender, the mortgage program guidelines assign a payment as a percentage of the balance, usually 0.5%. So 0.5% of the balance we assign as the monthly payment for that student loan account.
Okay. All right. So there's a payment that'll show up as part of that. Now we're getting to that debt to income ratio. So you're taking the minimum payment for the credit card, not the whole balance, because they don't have to be scared. And I think that's something that people kind of get a little fearful of is, I owe too much. I can't, and again, you want to have your debts in line. You want to be financially prepared. The bank is going to help you understand that, the bank's only going to be willing to take so much risk. And that's why they have these qualifying ratios that we're getting ready to talk about. And they're looking at the income first, and then the credit part, which involves the monthly obligations that you have. And they're going to look at that as a pretty holistic picture, but not worried about the bills, not worried about your utility bills, not worried about your cell phone bill. That those don't count against you from qualifying for a mortgage. That's good to know. And of course, then we got mortgage guidelines, and I think we could do a whole nother series on mortgage guidelines.
Right.
And each program has different things, I'm sure. So now we pulled credit, and kind of know what the income is, and then we've got a credit score, and we got maybe a typical balance with a minimum payment that's due for a credit card. So we got a kind of case point scenario. Okay, I'll let you take over now and talk about what you do next.
Yeah. So I ran some figures based on that scenario. Somebody making about $55,000 a year, currently renting, paying $1,600 a month, right, and successfully paying it. We hear often, well, I pay $1,600 a month every month. I can afford a new mortgage payment. Yeah, that's great. And we actually take that as what we call a compensating factor. So yeah, that looks great that you've been able to do that, but you still have to meet the mortgage guidelines of bills versus income. We can't say, okay, well, they paid the rent, so we're just going to give them a mortgage. So we still have to meet all of the program guidelines. And for this person, the theoretical person that we talked to, someone similar this week, they had a pretty large truck payment. It was about $900 a month. And that is significant when you're at a $55,000 a year household income. So
Yeah.
I ran just basic figures on one of the more popular mortgage programs for a first-time buyer, an FHA mortgage. So assuming they had no other debt, just that $900 a month payment on a traditional FHA mortgage, 3.5% down payment, most they're going to qualify for is about $175,000 purchase price.
Yep.
Using a first-time homebuyer program with low or no down payment, it's a bit more conservative. So you're only looking at about $150,000. Now, let's say that same person had a truck payment, car payment or just total payments of, say, $400 a month. That's probably very reasonable. Your approval is going to go up significantly, and you can see a lot of different houses versus with that larger payment. So in a traditional FHA, you're looking more at about $250,000 range. And on the first time homebuyer programs, about $215,000 with low or no down payment. So you can see, you're talking that's what 65 to 75 grand more in housing affordability.
Yeah.
And a good way to estimate your monthly payment and affordability when you're looking at differences, each $5 a month equates to about $1,000 in mortgage amount. So if you have, say, a $10,000 difference in mortgage amount financed, that usually equates to about $50. So if you chop $50 off of your monthly payments, you're going to increase your home buying purchase power by about $10,000. Not a perfect formula, but it's pretty close.
That makes a lot of sense. And I think that's really great to talk about that because, in this particular case study, we have somebody that really wants to buy a house. And so, why do people buy homes, right? They buy homes because they have dreams. They want to take control, and their needs change. So those are the three things that really in the world of a buyer are core decisions of or core things that help make that decision. So this person has dreams. They want to take control because they're in this rental situation that's not really working that great for them right now. And now they really have a need that's changed because, family dynamic, there's growth happening, and he's got a pretty stable income. And he realizes, now's an opportunity. But here's a financial decision that was made that was probably not really thoughtful as a financial decision. He just wanted this truck, and it was a beautiful truck. And look, people, it's okay to want and have nice things. I don't think either of us are going to say that that's not an okay thing to say. But when you are making financial decisions, when you're in that place of needing and wanting a change in your life, a home is a very valuable thing that is certainly something to carefully consider and plan. And going out and buying a new truck ahead of time really is not a great way to solidify that option of getting that home. So now we're looking at potentially $175,000 and arguably $175,000. It's going to be tough to find a home in any market right now for $175,000. But if that payment was around $450, or did you estimate what a lower payment would
I did $400 for a payment.
So if that $900 a month was now $400, he'd be looking in perhaps the low to mid $200,000 range. And not to say that there's tight inventories out there still, but that certainly opens the door to a lot more options. So if anybody's watching this video, if you kind of wonder what is the difference, cars are great, but you can't live in your car. It would be, I heard the term, years ago. In fact, when I first bought my house, one of the things that we were taking into consideration is we would much rather be house poor than car poor. And one of the first, what is one of the first things people do when they're young and they're out of college and they got a new job? Got to get that nice new car. Well, because you got to have good transportation. You got to be able to get back and forth to work and everything. But from a thoughtful planning standpoint, be more attentive and thoughtful about some of what you do with that car. And then maybe you can make that plan after you own a home, because trying to do so before you own a home obviously puts you in a little bit of a situation. So certainly this is a really cool scenario to talk about. Pretty common. I mean, how often do you find a situation where somebody's payments are just kind of put them in probably more often than not, certain payments make it very difficult for somebody to afford what they would like.
No, definitely. Yeah, that definitely happens fairly commonly. I had a case not terribly long ago where we had some affordability challenges. And if you want to talk about goals, her goal was to be able to buy a home so then she could try to get custody of a grandchild that was in a precarious situation.
Right.
So, being a homeowner to her wasn't just about having a home, it was about providing a safe haven for a family member.
Wow. That is so, and Kevin, I think that you and I both want to see people be able to make those smart choices in their life. And one of the things that may happen here, this is kind of an interesting, we don't know where this outcome is going to be. This is a real case study here. This individual that loves this truck is not attached to the truck. He's attached to wanting to have a house, and he may actually see about either selling it or trading it in and getting something that, he's still got some things to play around with there to see if that'll actually work. But, his opportunity now is to try to eliminate the height of that payment. That payment is so extreme, to get down to a little bit more manageable payment where he can now be able to potentially afford. So there's always something that can be done. Sometimes it takes a little bit of time to work through these things, but there are options available. And that's what Kevin and I are here to offer. If you're out there looking and you're considering, what are my options? Really, it's a great place to start, is just to have a conversation with the mortgage specialist. Give Kevin a call. Kevin is here and again, it doesn't cost anything to go through this preliminary process. It's actually a great investigatory, really, and it's not a commitment. You're not making an obligation, right? Am I speaking okay there?
Oh, absolutely. Yep. We're just here to help and advise and hopefully pre-qualify and pre-approve you so you can start your house hunting. And if not, we put you on a plan to get ready, and we will stick with you as long as it takes.
Right. So guys, there's the tools that are available to you, is an opportunity to kind of know where you stand financially. Don't leave yourself in a limbo guessing or talking yourself out of doing something. Educate yourself and make sure that you have information. We're here to help arm you with information so that you can make smart choices, again, to help avoid making costly mistakes. Here's a costly mistake that, man, if he'd have known back in January when he bought that truck that might keep him from being able to buy a house, I bet you he probably wouldn't have bought that truck.
Yep.
So
John, I had another situation come up recently. During a home inspection, it was an older home. They found that old, carcinogenic siding on the house from from the 60s and 70s.
Right.
They asked me what impact that would have on a mortgage. I said, it's a little bit complicated, but I can try to explain it as best as I can. Asbestos siding.
Asbestos. Did you get?
That's my.
How did that work out? That's an old.
That was my attempted dad joke for today.
That was a good joke. I'm glad you got to work that in there.
Yeah, that was a lot of work for that one, though.
That kind of led. Hey, it was pretty real. That's a pretty real scenario. So thanks, guys. Thank you, Kevin, for kind of talking through that. If you have any questions for Kevin, contact information for Kevin is here in this video. You can reach out to him directly. You can message us through this. You can message us through wherever the button is on the page that you see, and feel free to reach out. Kevin Onizuk with Alcova Mortgage, John Polson here, Homes and Land by John with Mid-Atlantic Residential here in the Williamsburg area to serve you and your real estate and mortgage needs. Thank you, Kevin, so much.
Thank you, John. Have a great week.
All right, we'll talk again soon.